All right, we are officially live with Bill Sokol, a good friend of mine and longtime colleague. Bill, how you doing today?
Good, Matt. How are you today?
I'm good. I'm good. So I just wanted to bring you on because we're in different times, right? And me and you kind of navigated these short sale waters back in '07, I guess, is when we kind of started working together a lot and navigating through the headache that happened then. So if you can help everybody, just tell everybody here a little bit about your company, what you do, and you're not just short sales, but tell everybody your law practice as well.
Sure. So, as Matt mentioned, my name is Bill Sokol. I'm the owner of the Sokol Firm. We've been in business for over 13 years. We handle everything you would expect a real estate law firm to handle. We represent buyers and sellers in residential and commercial real estate. We do a lot of contract reviews. We do a lot of closings. We do a lot of deeds. But most of what I'm known for, as you mentioned before, from 2007, the financial crisis, is helping distressed homeowners with loan modifications, short sales, and deed in lieu of foreclosure cases. So that's most of what we do, although most of the practice is focused heavily on doing short sales.
Okay. So for those who don't know, let's why don't you explain what a short sale is? I feel that unfortunately what's going on right now with people being told they can miss their mortgage payments and stuff like that. They're not being told the truth, which me and you are going to get into it in a little bit. But I feel like that's going to put a lot of people into the short sale category again. So why don't you explain what a short sale is and kind of how it can affect the family?
Perfect. So, a short sale situation is going to arise anytime somebody needs to sell their property, but the anticipated selling price won't be enough to cover the mortgage and closing costs, right? I mean, everyone's heard the term a property that's underwater or upside down. I mean, and that's exactly what you're talking about in a short sale. Yeah. You would want a listing appointment, for example, and you would tell the homeowner that the property's worth, let's say, $200,000, but they owe their mortgage company $250,000, right? And they don't have the $50,000 difference to bring to closing. So what my firm does in coordination with you is we would sell the property for the $200,000, and my office would get the mortgage company to forgive or eat the $50,000 balance. So the homeowner wouldn't have to bring a check to closing.
Right. And what are the costs for a homeowner to do this?
With my firm, nothing. We don't charge the homeowner. We don't charge the buyer. We don't charge the realtors. Our firm gets paid by the seller's mortgage company, the short sale bank.
Right. So everybody out there who's if you are in any position to right now where you're missing payments, there's foreclosure pending, foreclosure actions. Bill Sokol's number is at the bottom of the screen here, scrolling across, and we'll put it in the comments. So Bill, let's get into a little bit of what everybody's seeing on the news, right? A lot of people, the governors and the president and everybody's saying, oh, you can miss your credit card payments, you can miss your car payments, you can miss your mortgage payments. So let's talk a little bit about mortgage itself. And let's use the language that the banks are going to, they're not telling the consumer, right? So first and foremost, people are being told they can miss their mortgage payment. And the main term that people need to understand, in my opinion, is mortgage forbearance versus mortgage deferment, right? So if you can explain the difference between the two.
So, I mean, a deferment is just you don't have to make payments for a certain period of time. Forbearance is similar, but the difference is the loan payments, the balance, what you're missing is getting added somewhere back into the loan. Typically, at the end, I don't think anybody really knows fully how the programs the government's offering are going to be completely implemented. And the problem, Matt, and I think you'll agree, is that the same thing happened in 2008 with the financial crisis. Right? There was a financial crisis. There was a number of people who lost their jobs, although nothing even close to in comparison to the number of jobs that are being lost today. I think we're talking about over 12 million so far jobs lost due to the quarantine, which, dwarfs the number that was back then during the financial crisis. But same thing. The government comes out and says, we have these great programs to help these people, right? We have loan modifications. We have the Home Affordable Refinance Program, the Home Affordable Modification Program. All these programs that sound great in theory. The problem is the government leaves the implementation up to the mortgage company or the mortgage servicer. And the same thing's happening today. You hear about 90-day grace periods in New Jersey. You hear about forbearance periods of 90 days to a year. Nobody really knows how these are going to be finalized and implemented. And the problem is leaving it up to the mortgage servicer is going to be a disaster, and we're going to be, 2008 all over again.
Right. Right. So the main thing that I've been telling people is, number one, get it in writing, right? If you are, if your bank said, yes, you can, your forbearance is approved, you need to see how they're getting their money back. And a typical forbearance is only delaying the money, right, until the fourth month. So if you have a $2,000 mortgage payment, you're going to be able to skip 3 months. So $6,000 saved, but on month 4, you owe $8,000.
Exactly right. Who's going to have that money?
Right. And most people are not going to have the money, and that doesn't help anybody to move your payment to 4 months from now, right?
No, I mean, you're not going to have the money to make it do. And here's another thing. Let's say that forbearance was an easy thing to get. And me and you both know that it's not, right? It's not like you can call Bank of America or your loan servicer and say, look, I'm experiencing a hardship. Can I have a year's worth of payments off? It's not that easy. It's an application process, and there's a waiting game, and it's going to take sometimes months to get an answer from your mortgage servicer. But let's, for argument's sake, say that it was easy. And you could call your mortgage company and get a year's worth of forbearance in 10 minutes, which is a pipe dream, right?
Yeah.
Let's say you do it. What's going to happen at the end of that year? Like you mentioned before, you're going to owe a year's worth of payments. Who's going to have that money? And again, let's make it easy for the homeowner. Let's say that the bank says those 12 months are going to be added to the back end of the loan, right? So you don't have to worry about making those payments until 20 or 30 years from now. What about your escrow account?
Right.
Your bank's paying your taxes and your insurance all year long. You're not making payments into it. So the escrow account is going to deplete to zero, right? And even though you're not making those 12 mortgage payments right away, now you got to reimburse your escrow account. What if your taxes are $12,000?
Yeah. Yeah.
Right? $12,000 to give them, or the $1,000 a month to pay it? No.
Right. Right. And that's kind of what I wanted to get into was, the deferment as what. So a deferment, everybody out there, the difference in the language is mortgage forbearance, pauses a loan and it's all due the day it reinstates. Deferment is when they defer it to the back of the loan somehow, whether it's 3, 6, 9 months, 12 months, thrown into year number 30. So instead of 360 payments, you now have another 3, 6, or 9 or 12 months due at the end. But what Bill's saying is, your taxes, guys, don't forget about your taxes. Make sure you're saving that money in the event you get a deferment, because your bank's going to look at you and say, hey, your taxes are 12 grand. So we skipped 90 days. You owe us $3,000 to fill up your account here. So that's really important for everybody out there to understand. Let's get into people who have done modifications, right? Because this is a concern for me. It's been brought up to me. If you've done a mortgage modification, do you even qualify? Bill, what's your experience with people, not paying after they have a modification signed already?
Yeah, I mean, a lot of times the mortgage company won't help you more than once. So if you had a modification and you defaulted on it, they won't offer you another one. You're essentially forced into liquidation programs like short sales or deed in lieu.
Right. And with that, I mean, so this means, guys, if you modified back in 06, 7, 8, 9, 10, back when everybody kind of fell behind and got relief from their mortgage company, there's a chance if you miss a payment today that they're not going to, approve you. And Bill, I believe they pick up almost where they left off in the foreclosure, right? They don't have to go through all the crazy steps and, a long drawn out process, right?
I mean, as long as it's not dismissed, sure.
Yeah. So, so everybody out there, just be aware. If you did a modification, these programs that you're hearing and learning about may not be approved for you to use. Again, right? Get it in writing. What's it called? Let's talk a little bit about, what your firm can do, and can people come to you for help with this paperwork process?
Sure. I mean, all of our consultations are going to be free of charge. So you have nothing to lose by at least contacting us and letting me look at your situation to determine what I think is in your best interest. And I mean, look, if you really want to keep your house and you really want to try and take advantage of the government programs that have been created because of the quarantine, then, that's something I'm going to advise you to do. But I'm also going to try and manage your expectations, because I've been through this before, right? As have you, from the financial crisis. And I understand that although these programs sound like a dream in theory, when they're implemented, they become disasters. So the last thing I want you to do is put all your hopes and dreams into one basket, only to have them crushed and then end up getting rid of the house anyway. So we'll evaluate everything to determine what's in your best interest.
Awesome. So let's talk a little bit about, I know that short sales are going to come out of this. So number one, if you're looking for real estate advice, my opinion is seek an expert, guys. There's not that many realtors that are experts in short sale, foreclosure and deed in lieu and all the stuff that Bill mentioned. So the realtor you talk to should have a lot of knowledge, and you should seek legal counsel because they know more than most realtors. 99% of realtors. I don't know many realtors that know a lot about this stuff. So let's talk about what short sales are and how they affect you in the future in the event somebody gets to the point where they say, you know what, this house, it's just not worth it. We lost our jobs because of COVID for whatever. Let's talk about some of the implications. So go ahead.
Sure. So, and I completely agree. I think there's going to be more short sales from this crisis than there were from the financial crisis. And as you know, I'm still doing short sales 10 years after the financial crisis or 12 years after it, still in large numbers. So I think that this is going to create an even higher amount of short sales than the financial crisis did. But, a lot of people are going to have to, like you said, they've lost their job. The government programs that were promised to them aren't being recognized properly. So they come to the realization that they have to sell their house and they don't have any equity. So they're going to be doing a short sale. So the benefit of doing a short sale is you get out of paying the debt to the mortgage company, right? In my example earlier, the homeowner is getting out of paying $50,000 in debt to their mortgage company, but it's not without its consequences, right? I mean, anytime you settle a debt, it's reported to the credit bureaus as a settled account. And anytime you have a settled account in your credit report, it's considered a negative item. So while I can't comment for sure on how much your score is going to drop from it, although I think 50 to 100 points is probably a decent estimate, you're not going to be able to get a mortgage for a couple of years. I mean, that's the bottom line. Most of my clients don't seem to care. They don't really want to get another mortgage right away, but those who do aren't able to.
Right.
And in addition to the credit damage, there is, if the bank does cancel all the remaining debt, it does bring about a potential taxable income consequence because the IRS will consider canceled debt to be taxable income. So in a successful short sale where the debt is canceled, the homeowner gets a 1099 for the canceled debt. The good news about that too is most of our clients are able to avoid paying that tax because there are exemptions to paying it.
Right. So let's talk about that because, people may think, maybe scared now because they said, oh, well, you owe the taxes. You don't owe the taxes, guys. 90+% probably don't owe it. So if you can go over what insolvency means.
Well, sure. I mean, and just to point out another feature, even if they were responsible for the taxes, let's say these exemptions didn't exist. If the house goes to foreclosure, they're going to get a 1099 too.
Right.
So they can just mail their keys back to the bank and move to Florida. They're still going to get that 1099. Mm-hmm. So insolvency is a financial term that describes a person who has more debt in their life than assets. In other words, their net worth is negative. So if you have more debts than you do assets at the time you did the short sale transaction, you can avoid paying part or all of this tax. It really depends on how insolvent you are, how much higher your debts actually are than your assets. Again, we're talking about people whose biggest asset is underwater. So the likelihood of them having enough assets to make them not insolvent would be extremely rare. I've probably done short sales for 2,000 or 3,000 clients in my career. Maybe 5 people paid the tax.
Right.
And they probably deserve to because they have the assets that pulled them out of the insolvency equation.
Yeah. And I've always, explained this to my clients, and the reason you would get us involved as realtors, everybody, the reason you don't just walk away is, in my opinion, the debt only gets larger with time, right? Every month of your missed mortgage payment on a house you abandon gets stacked up against you. And eventually that becomes a really big number. If you hire us, we sell the home, we go to the bank, we say, will you approve this? And then there's different, types of short sales, depending on the bank that the loan that was on the property. And, you can even, if the short sale isn't approved in a certain amount of time for FHA loans, like you can deed it over to the bank so that you avoid that loan, that figure growing, right? And certain government products, they can't even pursue you for any deficiency. Some conventional products, they can pursue you for the money you owe them, and more. So let's talk about the, outside of short sale, ways to help homeowners, that are seeing this, right? Right now, the government is telling us, or it's saying, mortgage companies can't mark your credit right now for missing a payment. Well, does that help anybody? I mean, what's your opinion?
I mean, if they don't do, if they do in fact don't mark your credit, sure. I mean, it's nice to have your credit not blemished by a missed payment that you're supposedly allowed to miss. But again, I don't trust the mortgage service or the mortgage companies to actually follow through on that. I anticipate a ton of people and clients coming to me saying that, they were promised verbally over the phone that their credit wouldn't be damaged, and sure enough, there's a hit on their credit. And what options does that leave them with? They're gonna have to file a dispute with the credit bureaus for sure to try and get it taken off. But I mean, are they going to try and sue their mortgage service over something like that? I mean, it doesn't seem like a way to go. But yeah, it's just you have to talk to a professional first. Don't try these things on your own. Talk to Matt, talk to me, talk to an attorney if you're choosing. Find out what your options are, what the likelihood of success is, and once you have that education, you can determine what's in your best interest. Don't fall into the trap that a lot of my clients in the past have fallen into, where they lose their job, they call the mortgage company, and they say, "Look, I was laid off due to the quarantine. I need help. What are my options?" Mortgage company says, "Sure, here's an application. Fill it out." That is the death trap right there, and you know it, because just filling that application out, getting it back, and getting them to acknowledge they received it is a full-time job, right? A lot of people will go months and months and months in the application process thinking they're going to be okay in the end, and then they don't get what they need, or their assistance gets denied, and now they're 6 months behind on their mortgage.
And we've seen assistants get dropped, right? The file gets dropped, it disappears, or it just gets rejected because the homeowner didn't know how to fill out the paperwork.
Exactly right. I mean, little things like that. I mean, you're dealing with companies that essentially will tell you not to pay your own mortgage, right? How many times have you heard that from clients where they had some sort of hardship, a divorce or a job loss or a business failure, and they call their mortgage company trying to do the right thing? Hey, look, I experienced this negative event. How can you guys help me? I'm trying to do the right thing by contacting you guys. Sorry, Mr. Smith, we can't help you until you stop paying your mortgage. Well, what is an average consumer going to do when they hear that? They're going to stop paying their mortgage. They're going to read between the lines. They're not going to pay. And then after a 6-month application process for a loan modification, they get denied, or their payment goes up, or the payment stays the same, or it doesn't go down enough to actually help them. And now they're calling you for the short sale, or calling me for the short sale. And that is a very typical situation. I mean, a large number of the consultations I've had in the last 10 years are people who have been through that modification process. Most people, if given the choice, are going to want to stay in their home, right? Why would they want to leave? They want to stay in their home. They want to try and save it. It's where their kids grew up, their kids are in high school. They want to try and save their home. But in the end, they don't get to, because they get screwed over by their mortgage company. There's no other way to describe it. Their negligence rises to the level of criminality sometimes.
Yeah, and it's unfortunate. That's where, I just always coach my clients, and for everybody that's watching that needs help, that is sitting out of work, waiting for unemployment money and stuff like that, that number one, again, Bill, how much is a consultation?
$0.
Right. Guys, take time out of your day, get on Bill's calendar and set some time up to see what your options are. Make sure that anything that your bank says, or the person that is being paid hourly that just got hired because they know that this crisis is coming, knows what they're talking about, right? Get everything documented. If they agree to a deferment, a forbearance, my opinion, you guys want deferment. You don't want a forbearance. A forbearance doesn't help you. Pushing 4 payments to 4 months from now does not help anybody. If you're missing your income, you're going to need a deferment to put it on the back of the loan. Make sure it's in writing. Obviously, you want the longest term possible. And again, everything in writing. Bring the documents to you, right? They can bring modifications to you, right, Bill?
Absolutely, of course.
And then deferments. And then, guys, if you do get behind and the deferment wasn't allowed or approved, we're going to move into the next phase of mortgage modifications. Bill, you guys can be hired for that, right? You can be hired for all this. Is that correct?
I mean, we're hired. We definitely have a heavy concentration in assisting homeowners in distress. So loan modifications and short sales and deed in lieu of foreclosures. But I mean, we're never going to push somebody into an option, right? We're never going to say, oh, as a client, you should be doing this, you should be doing that. I'm just going to explain to you the pros and cons of every option you have and the likelihood of success so that you can choose what you feel is in your best interest. Unfortunately, a lot of times the short sale is going to be in your best interest because they're not really going to get the help that they need. But if they insist on trying to save their home, and I think there's a chance, we're certainly going to go with that too.
Yeah. And, look, everybody, I sat this year, well, last year, I'm sorry. I sat with 2 homeowners that I know realtors would have taken the listing. And I told the owner, I said, you have no reason for me to list your home. Here's what's going to happen over the next 12 months. You have some time where you're already in default or you're way upside down. Call me when there's urgency. You have no urgency. You're going to be homeless. There's no point to do this right now. Right. So again, that goes back to seeking an expert that has, sat with lots of homeowners, can talk to people like yourself. Any other comments for the general public or even realtors about what's going on?
I mean, just again, talk to a professional. It's the most important thing. There's a lot of programs. There's a lot of confusion out there. Not only what's available, the implementation of what's available, what can you do, what are you allowed to ask for? So I think talking to a professional from the outset is important. And look, if you talk with us and you insist on trying to keep your home or going for a deferment like Matt suggested, or even a forbearance because it's all they offer, and we go for it and it doesn't work in the end. Well, you already have me with you. So we'll move on to the next option, which may be listing the home for sale with a realtor like Matt who's had to handle short sales. I mean, there's, work with somebody, work with a professional, because if you try this on your own, you're going to be in trouble.
Right. I agree, man. Thank you for coming out, Bill. Thanks for your time today. Bill, how can people get in touch with you? What's your email? I got your phone
number. Obviously, you see at the bottom. Emails. I mean, we're lucky enough to be considered an essential business, so I'm still in my office pretty much every day for a few hours, just to be, just to keep a routine up and deal with clients that do call the office. My email is my first name, Bill, at thesokolfirm.com. So Bill at thesokolfirm.com is my email. Shoot me an email. I'm happy to communicate that way as well.
And I see a couple of your employees and paralegals on here. So girls, if you wouldn't mind, put all the contact info to the office in here. Hey, thanks for your time again, Bill. Everybody out there, seek professional help during these times. We're sorry. It sucks that everybody's going through this, but we are essential business and are here for your help. So if you need us, just reach out. All right, Bill, always a pleasure.
Say, Matt, take care, man. Thank you.
All right. See you.